Good morning, it's Tricia with Easy Emini Trade, and I wanted to go over the setups on the NQ and the ES for Wednesday, May 4th. I've been getting a lot of requests and questions about the different instruments, so I'll try for the next few weeks to do videos on the NQ, ES, the Euro Future, and the Russell. So later in the week I'll do a combined video on the Russell and the Euro Future. So here is the NQ, and on the left I've got my broader view, and on the right I've got my entry chart. And if you find the 1 point range chart too fast on the NQ, then just switch to a 1.5. You can certainly use a tick chart, a time-based chart. It's whatever you're comfortable with. So we get the first setup here at 9:46. Would not be looking for a short when the indicator crosses below zero for a couple reasons. We're above our moving average on the broader view here, and also we've got support here right below us of the floor trader pivot point. That's the only pivot point that I use, is the floor trader pivot point. I don't use all the other floor trader pivots such as the S1, 2, 3, etc. So off the open, nothing to really do here because we're right into an area of resistance, which is the close of the previous day. So I would be looking for something above that area here for a buy, and if everything got in line for a short, I would be looking for something below the pivot point here. So at 9:46 you get a setup for a buy. News is at 10, so just depends on your take on whether you're going to trade around a news item coming out or not. Totally up to you, the individual. If taking it, the area that you'd be looking for it to get to would at least be this previous high right here to the left, and you get that, you get your targets, and it works out just fine. The next entry would not have been until after the news, at least for me. This all happens way too fast. Even if everything is in line to take it, these bars can go by in a matter of seconds. You can have 6 bars go by just prior to the news or on the news. So no way to really trade that unless, of course, you're already in. Then you can capitalize on the move. This setup was at 10:06. Indicator crossing below zero. We're on the correct side of the moving average here on the 1597, so we're good to go. Area of reference is here based on previous support, and that's right where we get to, and that's where our target is. So once you get your target, once you get the first target, what I like to do is I like to move my stop to a tick better than my entry on my remaining contracts. So management will also be up to the individual on how you're going to exit all at once or in stages, and of course it will depend on how many contracts you're trading. Here you get a pullback entry. This is around 9:35 and 9:40. You get a pullback entry here where it pulls back to the moving average here, and you can see them right here and here. But the issue is that you've got a strong area of support right below you, and you see I have it marked here on the broader view, and if you look at that from the previous day, it was a strong area of resistance here, pre-market strong area of support. During the day, that's where we basically held up on the move lower. So you just would have to be thinking that that would be at least in the forefront of your mind, that that might have to be your target. So if you determine that there's enough room below you to take that, if it should happen to get stuck there again, then you take it. This was a trade at 11:03, and it was a short right here. Indicator gets below zero. We're on the correct side of the moving average over here. We have a good slope on the moving average here. So we're good to go. We'll take it. And it's actually over here that we get in. And it kind of bounces around a little bit. You can see that it takes forever. At least it felt like forever to work out. And it held the stop here, and then it did finally go. If you weren't in here at 11:03, you really would have had a brand new opportunity right here at about 11:14, 11:13, with the indicator crossing below zero. So if you didn't happen to get in here, then you could have gotten in here, and then you would have not had to suffer through this back and forth stuff here. So during the break, you get a short setting up at 12:20. And you can see it right here, indicator gets below zero. Everything's good to take it if you're trading during the break. So you take it and it works out just fine. If you didn't get in here, you actually do get a pullback to the moving average here, a pullback here, a pullback here. Any one of those could have been an entry. You have a good slope going here on the moving average, and you also have a good slope. You know, obviously the overall trend on the day is lower as well. So up to you if you're going to take pullbacks or not. I like them when you have a strong move going on, and they work out just fine. If you're going to take pullbacks, I would recommend a rule of thumb, and of course it's just a generalization, is entering in on pullbacks. The first one usually works, second one usually works, the third one usually is a much less of a move than the first two. And of course, that's just a generalization. I'm not saying you couldn't have 5 or 6 pullbacks, but generally speaking, you know, that's what you would be watching for. So during lunch, it kind of changes direction right here, but you would not be interested in a buy at that point unless you're very aggressive because you're in a downtrend. So once it takes off, and this is still during the break, once it takes off and pulls back to the 30, you could then take an entry. I would look for an entry above this area here, which is the low of the previous day. And so you actually get that right here. So you could enter there on a pullback entry. Also, right at 130, you get another pullback entry. Pulls back to the 30, and you enter there. Everything's good. You have a strong slope here on the broader view, good slope here on the entry chart. And so you could have taken a pullback here. You get a pullback right here at 153. The issue with that, for me, is that we were right back into this strong support resistance area that I pointed out to you earlier. So realistically, I would like it to take off above that area and then look for a pullback. So you get one here that doesn't really work out. It actually holds your stop by a quarter. You would never have been stopped out, but you would never got your first target of 2 points. On the next one here at 213, you do, but it's still in that same vicinity, and it's really the same setup as what you see right here. It's just this one takes off right away and this one didn't. So, you know, again, I didn't like the area that it was in, so then I would be looking for a pullback, you know, once it takes off. And then, unfortunately, it takes off, and it gives you a pullback right into all this junk again, the close and the floor trader pivot point. So unfortunately not much to do there. Here we get a short at 303, and realistically I would like it to be below this area here. And so basically once it breaks and then presents a pullback, then you could get in here at 303. It keeps on going. I would have liked it better actually if it wasn't quite so far away from that from our moving average here when it's set up, because when you get a lot of space between price and that moving average, the likelihood is that price is going to find its way back there, like it always does. You can see, finds its way back, finds its way back here, finds its way back. So so I opted to wait to see if we got another pullback to enter. So unfortunately I missed that entry, but many in the room took it regardless. And so so again, your choice. And the idea is that if you know what you're looking at and areas where you might get stuck, then you make an educated decision. You can decide based on your knowledge that, okay, well, I know I might get stuck there, but I'm going to give it a try anyway. And then if it doesn't work out, then you just can flatten and cancel at break even or with a slight loss. So the idea is that at least you'll have the knowledge to manage better. Okay, ES, broader view on the left, entry chart here on the right. This at 9:57, same issue as the NQ. It's right before the news, so you have to be the judge on that one. it's a pullback entry. You don't have anything to do off the open, but if you look at how price pulls back to the moving average here, everything's in line to take it as a short when you look at the broader view. But what can be helpful is when you look at that 6 EMA and the 9, in taking those pullbacks, if the 6 is not on like the leader basically, if the 6 isn't leading, then don't take the pullback. You can see the pullback here, but the 6 is still above that 9, and so you really don't know if it's going to go lower or wind up just going sideways here or bouncing through the resistance area. So when you're taking pullbacks, wait for that 6 to lead. Either way, if you're on the way up, it's going to lead to the top side. So right here at 9:57, you get a pullback entry. Here at 10:06, pulls back to the 9 and also back to this area of support and resistance, which is the low of the previous day. So that looks interesting there at 10:06. Here, I wouldn't be interested in any of these pullback areas here to the 30 for a couple reasons. You can see that you're kind of breaking through them there, like through that larger moving average, and all of the moving averages are all just tangled on top of each other. So realistically, you'd be better to wait for it to get some space in between those moving averages and then look for the next pullback. Here, you get a brand new setup. Indicator crosses below 0, and that's at 11:14. And let's see, 12:19 during the break, you get a setup here. Indicator crosses below 0. You're good here on the broader view, so you're good to take that if you're trading during lunch. And just like on the NQ, not really interested in this setting up for a buy right here when the indicator crosses above 0. For one thing, you're not above the 9 over here on the broader view, and you're in a downtrend. But here, once it decides to take off in the opposite direction and presents a pullback to the moving average here, you can enter right here on this bar at 217. However, you would be aware of the area of resistance above you. You've got the Fibonacci 50% retracement area, the low of the previous day, and the 200 EMA all right there above your head. So you would want to pay attention to that and use that as your target, in my opinion. So I hope that helps, and if you have any questions, you can certainly send me an email, and I hope you have a wonderful day.